Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The American right-wing swamp populism is driving the world's economy into a blind alley. Other countries are trying to figure out how to separate themselves from that. In the week ahead, though, financial markets will be assessing the risks of stagflation after the weaker labour market report in the US, and the growing expectation is that inflation's new rise will pick up steam. In the US, we'll get August CPI and PPI data at the end of the week, and their core CPI rate could well rise from its July 3.1%. That data will be put into context with the next University of Michigan Consumer Sentiment Survey update. Inflation data from both China and India is also due, but little upward pressure is expected to be seen from either of them. In China, new initiatives on support measures to keep their economy from stuttering are expected this week, largely to fend off deflationary pressures. And the ECB will be reviewing its policy rates this week, but no change is expected. Inflation is no threat there, giving them options. And over the weekend, we got a keenly anticipated American update on their labour market. It turned out that analysts were right to think the low forecast of a 75,000 rise in US non-farm payroll jobs was optimistic. In fact, they came in at just 22,000 for August. June data revised down by 27,000, and the change for July was revised up by 6,000. With these revisions, employment in June and July combined is 21,000 lower than previously reported. Trump's firing of the agency that reports this data isn't changing the sharp trend lower. Trump now has to own this trend. In fact, the total jobs added in May, June, July and August in 2025 is about the same as was added in August alone 2024. For them, it's a concerning trajectory, but it can be all traced back to junk public policy. Worse, the data shows that manufacturing jobs fell 12,000 in August, with clearly no sign of factory jobs reshoring. If we look at the unadjusted data for civilian employment, which accounts for more than just those on employer payrolls, the July to August change was a 511,000 reduction. It's a time when self-employed are really struggling. All this downbeat data is reflected in the financial markets on Friday. Wall Street was down 0.3%, bond yields fell sharply again, and the US dollar weakened. The polls spread to Europe too, where they are digesting the latest US strategic insult. The chance of a rate cut by the Fed has now become a certainty in financial market pricing as the central bank is scrambling to contain the growing fiscal mess, which looks like it's going to be much larger than feared and much sooner. A full 25 basis point rate cut is priced in for the mid-September meeting and another before the end of the year. Trump will get his rate cuts because of his actions to tank the US economy. But there are voting members who still insist that inflation should be contained before they cut. The next US CPI data is due in a week, and the current 2.7% inflation rate is widely expected to rise to 2.9%, with the core rate back over 3%. Which emphasises the risk stagflation's effects are hurting the world's largest economy. It was no better in Canada, where payroll employment fell 65,500 in August from July, largely due to a sharp drop in part-time employment. The trade shock with the US is getting the blame here too. And in staying in Canada, they watched the Ivy PMI closely, and that shifted from a modest expansion in July to none in August. But at least it wasn't contracting. Consistent with the official jobs data, the employment subcomponent of this PMI was contracting. A 25 basis point rate cut there is also priced in before the end of 2025. Canadian August inflation is expected to come in little changed at 1.7% on September the 16th. And the Canadian government is taking an activist approach to protecting their economy with a major support announcement on Friday. And data out across the Pacific was far more encouraging. Singapore said its retail activity expanded far more than expected in July and is now up 4.1% from June, up 4.8% from a year ago. It has been on a rising trend for almost all of 2025. And China said its foreign exchange reserves rose to $3.32 trillion in August, its highest level since late 2015. And it purchased a bit more gold in the month, helped by the rise in the gold price, of course, which adds another $2.5 billion to these reserves, which now total $3.64 trillion. In Australia, extended June quarter labour market data showed that the number of total jobs there increased by 0.3% to 16.3 million. Filled jobs rose 0.2% to 16 million, where secondary jobs decreased 1.2%. And multiple job holders decreased 1.3%. Hours worked increased 0.3% to 6 billion hours in the quarter. And the FAO Global Food Price Monitoring shows that in August, overall prices were stable and just marginally higher than where they ended in 2024. Dairy prices look like they've peaked, but meat prices are still rising, driven by beef and sheep meats. The US Treasury 10-year yield is now at 4.09%, unchanged from Saturday at this time, and that makes the weekly backslide 14 basis points to a 5-month low. And the price of gold will start today at $3,585 an ounce, down $7 from Saturday and just off its record high. That is up almost $150 from a week ago and a sharp 4.4% risk aversion rise for the week. And American oil prices are a bit softer at just under $62 a barrel on the struggling US domestic prospects, with the international Brent price also softer at just on $65.50 a barrel. A new burst of crude production is on its way too. And the Kiwi dollar is now just over 58.9 US cents, and little change from Saturday. Against the Aussie, we're also unchanged at 89.9 Australian cents. Against the euro, we're holding at 50.3 euro cents. That all means our trade-weighted index starts today at just under 66.4 and up 10 basis points from Saturday. And the Bitcoin price starts today at $111,046 and down a mere 0.1% from Saturday. Volatility over the past 24 hours has been low at just on plus or minus 0.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.